Welcome to Bitcoin Escape Plan. My goal with this channel is to help you better understand how the price of Bitcoin moves so that you can stack more Satoshis. Today we're going to start off with the 4-hour time frame as a reward for anyone who's coming to the video early, then work our way backwards from the monthly, weekly, and daily time frame, just so you're aware of why each one of these pivot levels are so important and what is the historical context on the chart that will allow us to see confirmation of certain levels. So before we do that, let's jump over real quick. You can go check out the newsletter at bitcoinescapeplan.com. Been releasing weekly since December now. I give out paid preview ones where I go more in depth into other assets like gold, SPY. I think I'm going to do stock or real estate market this week. And I just kind of give more of my ideas out than I'm able to do in today's, which is really just about Bitcoin. You can also go subscribe over here where you can see I'm pumping out tons of videos where I'm pretty much repeating the same thing over and over. So if you're not subscribed already, I don't know what you're doing. All right, back to Bitcoin. So we are currently sitting at the 91.6K pivot, as you can see. As I was writing the newsletter this morning, we were sitting right below it. We've started to break above it on that 4-hour pivot, which is very good. At around 8 o'clock Los Angeles time. That's the start of that candle. But as you can see, we started that candle way down here, or we went as low as that in that time frame. So at the moment, we've got to wait for this to resolve. I would imagine it will within 8 hours, no more than 8 hours. Obviously, if we see it close above that, that's permission to go higher. If we see it continue to test lower or close lower, we're going to get another impulse down towards that 89.5K level that we talked about before. But at the moment, trend looks pretty good. Trend looks okay on the 4-hour. It's also flipped higher on the daily, which we'll talk about later on in the video. Like and subscribe. Anyways, so what we need to pay attention to, and again, this is the 4-hour. So broadly, and I've talked about this many times in many videos, broadly what we're looking for is this guy. This is the anchored VWAP. I never redraw it. If you already have been on the channel, you know that. This, when we failed it over here, is what dragged the price down lower. And when we failed it initially, this is what gave us all this indication that we were going to be range bound and that we were not going to randomly go to new highs. I think I talk about this briefly in the newsletter today. This is one of my favorite things about this tool is it really just tells you whether we have momentum or not. If price is below it, then we don't have momentum. Like up here, sure. Give me all the arguments that you want that we're going to 130 or 150 because we're above the anchor VWAP. We're above it. You know, even here, we failed it for a bit in April, and then we regained it. Cool, game back on, you know? Like it gives us a clear signal on the chart. Whereas here, look at how long we've been stuck in this time period compared to April. So April, we were stuck for about 8 days, it looks like. Something like that. Whereas over here, I don't know what it is, but it's a hell of a lot more than 8, I'll tell you that. Yeah, at 60 days, more than 60 days already that we've been below it. So certainly not the same type of reaction to it at that level. And we're really having to assume that it's more like this guy, which obviously, again, did resolve to the upside, but that's at a very different point in the cycle. So I think it's probably more likely that we're going to see something like this, but you can't really see, can't see further. What we actually want to see is on this time frame. Oh my. Pause for finding the price levels. There we go. So you can't see it on this chart because this is showing a different trend with this level essentially. Still the anchored VWAP. Still, I haven't touched anything. This is what I use specifically to be able to understand where we're going to see a bottom. And the trend so far has been, you know, we fought to break above it. We dropped below. This is so long ago, but I guess it's still relevant for you to see. you can see it's a pretty tight channel. The upper band and the lower band, we stay in between it, but we show strength above the lower band, rise back above, give it back, and then continue rising. And as you can see, we never touch the lower band again. And I don't think we ever will, quite frankly. I think this will continue to expand to the downside forever, and this one will continue to expand to the upside forever. So what that means is it's very useful for understanding, again, relative bottoms. We can assume are at the, currently the trend is it broke the upper band and then reclaimed it. It broke it and reclaimed it. It broke it and reclaimed it. But as you can see here, this was an attempt, went higher, failed, and then it went much more quickly here than it did here. Here was a period of a while where it was testing it and failing it and then going to it before it broke it. But a much longer period of time here in this bear market progression at the end of 2018 into 2019, which I will say, this is my base case for what I think is going to happen specifically on the monthly chart here, is this exact progression, where it really breaks down on the monthly, not until November. And as you can see, this continues to rise and round for most of 2018, which would put us at a similar position now, being this equivalent bear market. So we haven't really seen, it still remains to be seen if this is going to round out or not, or if it's still raising higher. Still, at the moment, looks like it's raising higher. It's kind of hard to tell in retrospect, like exactly where this curve happened. It looks like May of 2018. That's when it started to sharply curve a little bit, which would match my baseline thesis. We've talked about this already in my 2026 price prediction video, but I would imagine that price is going to stall out by March or February and then start dropping lower. It's going to pull this SMA down, round it out. I know nobody wants to hear fucking bearish news, but I hate to break it to you. This is the likelihood. I think that's going to round out and start dropping. And then I would expect by that time period, we'll start to really see the SMA, or rather the anchored VWAP. We'll start to really see this guy start to round and flatten. But I'm really not expecting that to happen until closer to these levels. Really, like 39 is the lowest I can believe, which means we still need to see this rise for a couple months in order for that to be the case. Otherwise, the possibility is that it's going to drop way lower. Now, baseline assumption is still that we're going to either not break it this time, or we're going to likewise break it very quickly and then rise above. So it's quite possible, if say it starts flattening here, and it'll still gradually rise over time, because even in this time period, right here, at the start of this flattening is like 16.6, and it's at 17.4 as that trend just continues. And even the more you zoom in, the more that's not flat. Like that's rising the whole time. And even over here, again, this looks flat when you zoom it out there, but it's really not. It's a steady, consistent uptrend, and that's what we should be expecting this time as well, is this anchored VWAP band is going to continue to rise, and we are either going to eventually break below it, or we are going to show significant strength above it. And I would imagine, somewhere around here, like what is this? So it's only 15% above that. So what's 15% above? I didn't mean to do that. 15 is right here. It's about $4,500. Puts us at 32. Like I said, I don't believe that it's going to drop that low necessarily. The lowest that I actually really can see happening is, I would say, about 39. That would be towards the end of the year, and we would know like we'll know, I would say, by May roughly, whether there's any hope of a rally continuing or whether that initial push that we're going to get into March is all that we have for the year, which is my base case. That is what I believe is going to happen. Let's go check this on the weekly time frame. See if we can see anything relevant. Pretty much same story for the anchored VWAP. We see another one over here where we're touching it briefly. And same thing, an extended period of time here where we are below it before recovering. This is really the best way to use this tool, is specifically to anticipate bottoms. So what is true is this will continue rising forever, and eventually this will need to come back and retest it. At least that's been true so far for Bitcoin. It's possible that we just leave this behind and continue rising forever now that there's institutional demand. Certainly the chart looks different from about here onward than it had previously. This is much more parabolic. This is much more parabolic. This is stair-stepping and boring. Like that's the reality. It is a parabolic run, but it's less and less parabolic the more that you stretch it out. Like then it just looks like business as usual. So base case, I would still say, is we're going to revisit these levels, which is between about 73 and about 50, roughly. I would imagine we're going to reach that at some point this year. There's no other time that we could reach it, like it's not like we're going to magically teleport there at the end of 2028 or 2029. Like if price is ever going to revisit these levels, then it would be this year in 2026. So what I really think is going to happen as this level continues to get pulled down, so we've been watching 106.8 for a long time. I've been talking about it since at least last summer as like a relevant pivot point because it's old. It was a relevant pivot point all last year. So I would imagine if we can rise back up to that and show something similar to this, it's going to be considered a significant failure. And that is what is going to really start the downside momentum. We held here, which is good. It showed some strength. Even if you look at these levels, the closing candles are still above where these closing candles were in March or April. That is a sign of strength, a decent sign of strength, at least enough for us to attempt a push higher. But another failure of the weekly SMA after being gone below it since October. All this time we've been below it. That's a long period of time for it to need to resolve. And obviously it can. This is 2024. It obviously can resolve higher, but it's really more likely that we're going to see something like this, where it's dropping, it's below it, it's touching the bottom of the Bollinger Band, it's rising back to it, it fails it, and then it continues below for an extended period of time. At the moment, we have broken to the bottom side of the band, just like here, broken to the bottom side of the band, started to come back inside it towards the SMA, broken the bottom side, started to come back inside towards the SMA. We're waiting for a reaction at 96K. I've been talking about this for several weeks. If we can get strength there, and remember, this is on the weekly and monthly time frame that this is opened up, but as we know, it's also an important anchored volume profile level. It's actually this guy right here. That's why that's showing up. It's like directly with that level right there. It's because of that amount of volume on the chart. And then that is going to be the only thing that actually gives us permission to make a sincere run for, I would say 99 to 101 is like the important psychological level. And that's probably right around where the SMA is going to drop to. Right now it's at 101.6 roughly. And I would imagine that's going to continue to drop by the time we actually interact with it. I don't think we're going to interact with this tomorrow. 96 is possible, certainly by the end of the week, but 100K would surprise me this week. I think if we do see that, it's more likely an end of January move. And it's very possible, like I talked in the newsletter today, that we see a significant failure at 96 and another retest of 76.3 before we go higher. Though I will be honest, I think we've spent so much time below this weekly SMA that I actually do have a short-term bullish bias where I think we're actually going to retest and reclaim strength at 96 temporarily. It's just going to be this level that is really telling for us and might end up being a false indicator, like a false breakout, because this is still the one that's most important to me. This is 106.8. I think that one is really like, that tells us if we're done or if we're going to keep running, but we'll get false confirmation of 96, which 96 is like, it's not important enough for it to be, all bullish, full steam ahead. Like it's not. The 100K narrative probably would be if it had more technical volume. It looks pretty ugly at that level. This is 100. It looks very thin right there on the anchored volume profile. So the only thing that would really actually give us permission to shoot higher is if a ton of money entered the market there, and there's just no reason to when most of the money is below, and there's still a significant enough above that is not in profit, that is looking for a way to get out of the market, most likely, unless they believe we're going to start shooting up here or up here, which I don't see in the short term based on the shape of this chart. It's just not what it looks like. So most likely scenario, I would say, for between now and the end of January is we make a sincere push for 96 and are able to break it. And then we have a slight period of time where we're interacting with the SMA between 96 and there, which again, it's at 101.6. I would imagine by the time that we interact with it, that's probably going to be 101.4, 101.2, something like that is where that'll continue to get dragged down to by the time we have an interaction with it. But I wouldn't consider that like, okay, now we're bullish just because we're back above the weekly SMA, because it could very well be a circumstance like this where we spend we break out, we have 1 week where we're above, but we fail another pivot point, which in this instance, this would likely be the 106.8K pivot. If we're to take this as this is 47.7, but I really think that is the important one for us to pay attention to now. As you can see, it's a similar pattern. This is lower, but if we see a spike here, this is where it would fail, and then it would continue lower on this trend. That's my base case. I know, again, you don't like to hear that, but that's kind of what we have to assume based on when we see a major break on the weekly or monthly SMA. The weekly is a little bit different than the monthly. The monthly, it's more recent that we broke, but the weekly, we've been broken since September, October. For a long time, we've been indicating that we're tired and then we're kind of done on the weekly since literally September. So this should not be news to anyone that price was going to fail 100. That was one of my most viral threads last year, was me saying how price was going to go below 100. And I really think now, I mentioned this in the newsletter, I just don't think that. So stablecoins, the earliest they can go live is the law has to be in effect by July. They have to have everything finalized for the bill by July. Now, assuming by some miracle they're able to do that between now and that deadline, which I would imagine will take them that whole time period. Remember when they just closed down the government for a bunch of months last year? They're talking about doing it again. Not exactly super organized and having their shit together at the moment. So that's where liquidity is actually going to enter the market, is once those stable coins are in full effect. But realistically, as far as I understand, They won't actually go into full effect until January of 2027, which means we're going to have a whole year of people talking about or crying wolf for liquidity, about talking about how liquidity is going to return, the stablecoins are going to change everything. Meanwhile, they don't go live until 2027. So I think we're going to see a rise above 96, probably right into that 99 to 101K region that I've talked about before. And then we're going to chop between 96 and there for a little bit before seeing one significant push to 106.8K before failing it. And that would be when we would see a major capitulation. However, I do think that that's going to take between now and March to resolve itself. I don't think that's all going to happen in January. I think that's going to happen over the course of Q1. And we'll want to pay really close attention, because if we start to show, like, specifically here on the anchored volume profile, if that really starts to fill out where it's like out to here and it's like starting to be larger than the amount of price above it, and these levels are not thinning out of people like wanting to get out and take profits. But you have to think about the psychology of somebody who just recently re-added to their position here, did it because they think price is going back here. Like they didn't buy it because they think price is going here. So you kind of just have to think about it of like which outcome would cause the most pain. And I do think that what would cause the most pain is a bunch of people enter with size here. And again, we saw already that the anchored volume profile point of control is here now. It's at 87.8-ish. That's where people entered with size. That's this guy right here. A lot of people entered right there because they assume that the price is going to go higher. Now, that's a pretty good entry, even just from there. Let's see what that is. To 106. It's about a 20% move to that 106.8K. And again, you got to think about, these are institutions now that are moving the price of Bitcoin. So we're not going to see 1000x gains anymore. Like, it's not going to happen. It's going to be, more significant pushes for 10 or 20% at a time that happen over the course of several days or several weeks, because it's still predictable, for the average institutional investor to be able to move it. But really what I think is most important about this trend is going to be what banks can offer their customers to get them hooked on stablecoins. And what they need to get people hooked on stablecoins, which again, this is kind of like a classic drip of the value getting higher since institutions have entered the price. Look at this. Look at how like stair-steppy that is compared to how it was in the previous. It used to be really, really boring for a long period of time, and then it would shoot up. And now, really, really boring for an extended period of time. Then it starts to shoot up, and then it's boring for a long period of time. Then it starts to shoot up, and then it's boring for a long period of time. I think that we're entering a time in the Bitcoin cycle where that is going to be the case, where it's going to be boring for longer and exciting for less time. I know no one wants to hear that. I know that sucks, but I do think that is reality. Is we'll get exciting pushes, but they'll be shorter lived and not as high as we thought they were going to be. And then we'll spend more time being pushed down lower, possibly just because of, if I'm JP Morgan Chase, do I want my customers to FOMO in when the price is here? Or do I expect more of them will FOMO in when the price is here? Now, I think the answer to this question just really depends on like how, basically how evil you think corporations are. Because if you think corporations are really fucking evil, then what you actually want to see is stablecoins go live right at around when Bitcoin is back to 100K on this push. And then the stablecoins go live, and now hundreds of billions of dollars have just been printed in the market in general, and a bunch of that passively flows into Bitcoin, and price continues to rise. That would be, like everyone's, what they think is the happiest scenario. if price just continues to rip from that point. But the reality is, if you're Chase, same as in 2007 when they were still writing mortgages to people who did not have the income to have two mortgages, Chase doesn't care. They don't care because if you can't pay it, they get to keep your house. So it's going to be the same for them, where if you can't, keep enough money to pay for the downside of your Bitcoin-backed loan or repay enough of your Bitcoin-backed loan with Chase in order to facilitate the loan, they're just going to sell some of your Bitcoin. So for Chase, they don't care if they start offering that at 100K this time around and then it starts to bleed in the opposite direction. That just means they're going to get some distressed assets for cheap because of that, because they're going to have to sell your Bitcoin to do so, And maybe they have other circumstances on the back end where they're going to, the banks are fine, quite frankly. They don't need to even worry about accumulating Bitcoin themselves, because they've got a built-in mechanism now for whenever somebody is buying these stable coins, they're going to be passively propping up the US dollar, and the banks are just going to be the largest customers of US debt in the world, but it's going to be propagated by their customers and they don't even realize it. I think what is more likely going to be the case is JP Morgan Chase wants their biggest clients to have an opportunity to buy back at these levels, and they want them to do it en masse. They want them to do it to the tune of hundreds of billions of dollars in these stablecoins. Again, they're anticipating somewhere between $1 and $5 trillion will be printed between now and 2030 in these stablecoins. And a passive assumption, I would say, is that 20% of that money will flow into Bitcoin. But if it's actually staying true to how stablecoins and dominance has worked in the past, then as much as 50% of that could flow into Bitcoin. And that's when we really get talking about these higher price targets again. But I think that that's at the end of this expression. I think that that's 2029, 2030 that we're talking about higher highs. I just don't see the argument for 130 at the moment. And I don't really see it reflected on the chart either. You can see these pivot points, but as you can see, we're nowhere near them. It was like the price was just doing that as a courtesy. And even here, that's lower than the previous pivot points, it just continued to descend during this time, where that was the market was hoping for that. The technicals were hoping for that, but it just wasn't reflected by the actual movement every time it got to the SMA and failed it. So now, this is the daily time frame, and this is worth noting. We are back above the daily SMA for the first time in a long time. This is the only other significant break above it. This is in December before we start failing back below it again. Since all the way back here in October. We chopped around it for most of last year. You can see we're met with sharp and very short increases to the upside before mostly spending our time below the daily SMA. So that's what we're going to need to see now, is some sharp explosive expression towards here. But then if it just continues the trend of how it's been, not even how it was, if we go back and we look further, what was it doing in 2022? So 2022, same thing. Sharp and violent impulses higher, long periods of time below. It doesn't look like this. Not anymore. It hasn't looked like a sharp rise to the upside since here. Late 2024. I think people really don't understand how much that changed the nature of this cycle by us getting that run early. I'm going to switch back to the monthly to display this. I've talked about this in other videos. This happening, us jumping to 74K, 73.8K in March of 2024 on the halving news event, that is the first time we've ever reached a new all-time high in the halving year, and I think it fucked up this cycle. I genuinely think it fucked up this cycle. I think it did two things for the most part. It reduced how high the price was actually going to run. If we didn't see that expression, if this was more gradual, then we probably would have seen 130 or 150. But because this was such a violent expression to the upside that we then had to correct, it shortened the lifespan essentially of where this cycle was going to go before needing to correct. And I think the other side of it, though, the benefit of it, is I think it very likely could form a stronger level of support here than if we go back and we look over here. We're way above these levels of this bear market before we go into 2020. So if we kind of look at this as the same, we can assume we're going to be way, way above the top side of this range, which that's at 31. We can assume that the price is going to wind up way higher than that, which we talked about this before. I want to say this is 35. There's a bunch of evidence for that all the way back here. A bunch of those levels interact with it. But I think it's more likely this guy. This is 43-ish. That's probably going to be the lowest that we can see, is between 39 and 45-ish, roughly. Somewhere in there. And that's going to be largely because of this. Like, maybe the math was available for us to reach. I mean, we're never going to reach 15K again. But good possibility of at least going to the halfway point of these candles, 61.4, which puts us at whatever that is, like 30.8 or something like that, technically, like right in here. Which, as you can see, that's where those closing candles are. So there's a possibility that price gets pulled in that general direction, but I think that this actually prevents it from ever getting that low again, and we're going to be more likely looking somewhere between here, this is 45, and 37. Somewhere around there, I can see the price actually finding a true bottom, and that won't be until the end of the year. So, in conclusion, for this video, the short-term trend that you want to pay attention to is, what did I just do? Zoomed in too far on the computer. You want to pay attention to 95, like we've talked about. This in the short term, 92.8 roughly. That'll be within the next day or two. But 95 up to 95.7 for the anchored VWAP. And then anywhere between 99 and 101 is going to be super important for letting us know, are we going to see price make a sincere run above 100K, or are we just going to bounce off it? A lot of times when we're at these levels, there are big candles just pushing right through it. So there's not really, there's some time for us to gain a decent amount of volume in these levels. We spent a lot of time there previously, but that doesn't mean that it's going to hold strength there necessarily. As you can see, we're holding just below those at the moment. These are the lows at that time. We broke below them, and we currently are right around at them. So essentially the price has done nothing at all for the last year. So I think that's the main reason why people are just hoping that they're going to get another push higher. But the cycle theory just doesn't really confirm that is the case, that's what's going to happen. And I wouldn't be looking for that. That would not be my base case. Base case is it's going to show strength at 95 into 99. It's going to fail somewhere before we get to 106.8K, 105.7 possibly. But I don't expect that to happen in the next couple of days. That will take longer, probably between now and March. So I would just be looking at your positions, considering if you have altcoins, some of them are going to run right now, and maybe it's time to take what profits you can if you have them, or to trim. Because if Bitcoin loses 105.7, 106.8K, like I thought, it's going to drop a lot lower. That's when it's going to make another move for 80 down to 76 or lower. That's what we're going to want to pay attention to at that time. Definitely not something you're going to want to miss. I will be talking about it here on the channel. Make sure you are subscribed so you can see me ramble about that one. Thank you so much if you have waited all the way into this part of the video. On Wednesday or Thursday, I'm going to do the paid newsletter, and I think I'm going to talk about the real estate market this week, do kind of like an analysis of how that overall business cycle affects the price of Bitcoin, because this is really the first cycle where we're going to see those two interact in a meaningful way since 2008, when Bitcoin was actually created as a mechanism to protect against the housing market crash, which is very exciting. For all the bad sides of the price going lower this year, it is very exciting that we're about to line up the real estate and Bitcoin cycle, as well as the gold cycle. As far as I'm aware, all of those kind of come into convergence around 2029, 2030. So you're kind of just going to have to buckle up. It's going to be a long ride for us to fully see that expression. And I do expect us to go lower in the short term while we are on our way there. But no worries. I'll be talking about the levels. Make sure you're subscribed at bitcoinescapeplan.com to get the shorter version of this in the newsletter. But other than that, thank you so much. Like and subscribe. I'll see you in the next one.